Welcome back to the Anatomy of the Trade in the new 2021. And Happy New Year to all of you around the world, for those of you who are uh, our viewers and watchers of the Anatomy of the Trade. Hi, Franz. Happy New Year.
Hi, Ramon. Yeah, thanks. Same to you. 2020, a lot of people had a lot of issues with it, but it was just another year, another, a calendar that we just threw into the trash can. So let's make the most out of 2021.
Yes, and with that, we're just going to start concentrating on what we do. We're going to discuss trades that we go through, whether these are the trades by us or by our students. And today specifically, we're going to explore the trade by one of our advanced students, Kurt M. And his trade in the American AXTI technology. This is a semi-stocks. But before we do that, let's talk about the new semester and what's coming up. And I really, really would like you guys not to skip this. Why? Because I want you to listen to what is going on with our classes. And as we do so, I want you to think about what is the benefit if you join us. And obviously, I do want you to join us for multiple reasons. One of them is if you're a, a a very consistent um, uh, viewer of our recordings, you kind of realize the whole mindset that I have about studying and teaching, and specifically my relationship with students. If you are truly on the path of improvement in your training, you have to consider this offering, and especially if the methodology appeals to you, because time is of essence. And if you are thinking about this, even in the very smallest sense, like you're thinking like, it would be great to take this class, I just don't have time. Or maybe I don't have, extra resources, to commit to this. Or maybe this is too much of the commitment, in terms of the homework that's going to be done. Then you should most definitely sign up. And the reason why is because time is of essence. Stop thinking about this. Do something about this. Go and improve. Go and become better. So from that perspective, let's quickly go through the curriculum of all of the classes, the three main classes that we have. And then I want to convince yourself to sign up and to actually start going to the classrooms, start talking to me and to your peers, start working on your homeworks, start doing the work that really will result into some kind of progress. And don't allow your egoic thoughts to uh, to do something else, to procrastinate. So with that, let's go through the curriculum. So the first course that we have is foundational course. And a lot of traders that are trading, for instance, Forex, cryptos, futures, always ask me, well, your examples are usually with stocks. And this is true, but the concepts are the same. The markets where you have the price, volume, and time will be analyzed the same way. And there are some nuances, obviously, which I do mention. And the reason why I do mention those nuances for different markets is because I do trade those different markets. I do trade futures on E-minis. I do trade options on stocks. I'm starting to trade cryptos this year as well, and obviously I do trade a lot of stocks just in general, either for cash or leverage or options. It's all there. Also, another question that is very common: what about the time frames? I'm an intraday trader. I'm a swing trader. I'm a campaign trader. Well, I do trade all of those timeframes as well. And this is not a coincidence. I truly believe if I will have an intelligent discussion with you guys, I have to know even more than you in the way of the knowledge and in the way of the skill. That's my profession as a teacher. So therefore, I not only have to trade, I also want to trade, and I'm really enjoying trading, all of those markets and all of those time frames. And I have a very specific style where I'm looking for speculative opportunities rather than just trading and trading and trading specific instrument or specific asset or specific time frame. So with that, don't stop yourself if you have a thought, oh, okay, I'm a crypto trader. Don't stop yourself from signing up to those course, because the concepts, the foundation is gonna be the same. How does the price moves? It moves in a specific way, regardless of the market. Why does it happen this way in all of the market, throughout all of the markets? Well, because human behavior does not change. We as humans exhibit the same fundamental principles of how we function in the world. We are all about survival from early ages uh, of of uh, of people existing on Earth. We needed to survive. We're doing still the same thing. It's so rudimentary, uh, locked in us. And then we need to accumulate. We need to hoard whatever we we acquire. So we need to go hunt, and we need to create, herds, households, and maintain that structure. So it kind of puts a lot of pressure on us in trading to behave this way, and at the same time to start thinking about that the market actually requires a slightly different behavior. The market is counterintuitive to those two things, survival and keeping up our possessions. So we need to overcome that mentality, that built-in mentality, almost at the DNA level, that we have to change and start thinking in a counterintuitive way. And we could start that developing that type of thinking through just very much simplistic mechanics of how the price moves. And with the first 4 or 5 sessions of the WTC1 course, we're going to go through the change of character, change of behavior type of setups and situations where you will be aware that the environment changes, and specifically price structural environment changes. Let's say from an uptrend to a trading range, from a downtrend to a trading range, from a trading range to some kind of trend. And we're going to recognize those environmental changes through the prism of Wyckoff events and Wyckoff phases. And those are all price structural things. Then we're going to go into the supply and demand, or volume and price analysis. This is probably one of my favorite topics on the level of knowledge. We're going to talk about effort versus result. This is where the changes in volume are representative of the changes in the effort um, behind the volume increases and decreases behind the market participation, and then changes in the results as to how the price reacts to those changes. With that type of information, we could make a determination as to what's going to happen next, or at least approximate with high probability what's going to happen next. We're going to also talk a lot about the VSA, volume spread analysis, bar by bar analysis, and also swing by swing analysis, where we would be comparing uh, bar to a bar, one analog bar to another analog bar, one swing to another swing, and we will make determination as to the bias and the character with which potentially the next price movement is going to unfold. We will talk about the volume patterns in different Wyckoff phases. Those are extremely important, and there is a lot of nuances and differences as to how phase analysis, volume phase analysis develops in the trading range. And then we're going to go through a lot of historical analogs. The next section is going to be on relative and comparative analysis. And a lot of you already know what this is, you're using this, and that's totally fine. But I want to give you a nuanced way of thinking about the relative and comparative analysis based on the Wyckoff methodology. We will discuss the sweet spots of outperformance, underperformance. We'll talk about some filtering and basic scanning that we can apply in our selection algorithm. And then after that, we're going to cover trade management. This is where we're discussing exactly where we would enter, exit the trade, where we would put original stop loss and how we would move the stop loss. And one of my favorite topics is how do we actually build our positions and how we scale out of our positions. That is extremely important for risk parameters, and also just establishing confirmatory way of behavior in the marketplace as the trade confirms the proper bias, the proper entry points. And then, as always, the last session is a Q&A session where we're going through a lot of your questions, maybe like 20, 30 questions per session. So with that, let me come back to Franz and just ask Franz, well, Franz, you've obviously taken this class. What is the biggest value, the biggest benefit that you've extracted attending the WTC1 class?
Well, hey, Ramon, as you were talking, I was thinking about just a number of different points salient to the ideas that you're bringing up. And the first is just making the investment in yourself. I know we've got people from the States, we've got people from, all around the world that watch this. So just a quick history lesson. Benjamin Franklin was one of the founding fathers of America, considered to be one of the wisest men in American history, had a whole lot of interesting sayings. And one of his sayings to me that's one of my most favorites is, pour the money in your purse into your mind, and your mind will fill your purse with coins or with money. And I think that, goes without saying that if we make those kinds of investments, they're going to pay off. So, and this course, this series of courses, this whole, this learning environment that Ramon has created has just is, to me, it's great. Just my background very quickly. I'm retired. I was a financial advisor at one of the largest wirehouses for 30 years. And when I retired, I've always loved the markets, but I didn't any longer have, the support of the research department of a huge firm. So I'm thinking, well, I'm going to take care of myself. So I need to learn this stuff. And I looked around, played with a bunch of different things, and came across Ramon's school, his, Wyckoff Analytics. And when I looked at this at first, I thought, oh, part one, what do I need that for? Well, Ramon said, if you want to go through the other parts of it, you've got to take WTC1, because we've had people that have been in the same situation and said, oh, what do we need this for? Let's get right into the next session, the execution. But I found out very quickly, and my process while I went through this, which Ramon suggests, is to take notes. And I have got a book full of notes of this course that I took for each session. I took it back in 2018, but I go back and refer to that constantly because it's the building blocks for everything that comes after. And you go through this, you at least get a grasp of it. For me, in my case, I see what's there initially, but I don't really internalize it. I don't really understand it. And as I keep going back to my notes and seeing things, all of a sudden now, after 2 years in this, it's making all the sense in the world. But, it's just, for me, it's just been a tremendous way for me to up my game and to, using these principles, become a much better manager of my own money.
Well, fantastic, Franz, and thank you for this more personalized intro, from the student perspective. All right, well, let's jump to the next course that we have. This is the follow-up course to WTC 1, part number 2. It's all about execution. So if the first part is all about knowledge, the second course is about execution. How do we take that knowledge and actually deepen it? That's number one. Then how do we actually recognize all of the concepts that we've learned in WTC1, the knowledge concepts on the chart? And one of the things that I've realized in my career as a trader, just doing it myself for the last 25 years and teaching this material for the last 10 years. And actually, yes, Wyckoff Analytics, this is the 10th year that we've been in existence and I've been teaching. The ability to recognize the concepts is very poor in students. They might know, you might know the concepts. We could even discuss, some of the Wyckoffian concepts, and you would just could describe them to me. But would you see them on the chart? And this is where the rubber meets the road, so to say. And majority of students just fail there. And the only way how you could, diminish that variance between your knowledge and the skill is just through the drills and the exercises. And I'm a huge proponent of practicing the knowledge and developing the skill. So we do so many drills and so many exercises, through these classes. Each class, each homework is just devoted to the skill development at this level. So this is kind of like the next step up. Well, obviously, we are developing a little bit more of the trading tactics and management of the trade. At this level, we talk about different price structural scenarios, what they mean, how do we behave, if one scenario develops over another, what's the mental outlook for us, how do we maintain that, proper mental outlook throughout the trade, even if it goes against us, trade management itself, some of the risk management parameters that we discuss, filtering through the selection exercises. And then we go into even deeper knowledge of the Wyckoff methodology as to the specific behaviors of the phases, variations on the volume signatures, trend behaviors is a big theme, especially for this year. It's going to be, and then some kind of references to just some modern technical analysis tools that we discuss in this class as well. This is the class for very serious students. So I do not allow students to come and just say like, okay, I want to go to this level. This is just not a serious approach to me. I always say no. You have to go through the proper education to come to this level, because you're going to be a big distraction in the class, asking very basic questions that you thought you knew and you obviously did not. Okay, Franz, I think that my next question is, what was your progression, let's say, from WTC1 to WTC2? What WTC2 gave you over WTC1?
Well, WTC2 takes I mean, in WTC1, you lay the foundation. You understand all of the basic principles. You understand what the framework is that we're going to be operating in. But as you said, it's just basic knowledge. It's not really, applying it in a way that is useful, at least not for me. So I'm actually, I think I'm now, we just started, I think my fourth course of WTC2, because every time I go through it, something else, not something, many new things, new nuances, new, what has been there but has not necessarily been thoroughly recognized and internalized, becomes more obvious. So the kind of the progression for me is the from knowledge to internalizing it to becoming a part of my whole, my whole being, really. I don't know if that makes sense, but just going from knowledge to understanding and
Yeah,
being able to apply that. And
it's so
I'm
interesting
getting
how you
better. I'm
mentioned
still
this.
not there, but yeah.
Yeah, it's so interesting how you mentioned this. Knowledge is not necessarily understanding. So, and that's, also a big kind of like illusion if you have the knowledge that you understand what it means and you can apply this. So this class obviously kind of like brings us closer to the actual understanding of the knowledge and obviously the, improvement in execution. All right.
I think Richard Wyckoff himself had some sort of a statement about how much time he invested in studying the markets until it actually made sense to him, until he was able to, internalize everything. And it was, you might remember better than me, Ramon, but it was, you got to do this for hours and hours every day for years to really absorb it. And it's true. But the more you work at it, and Ramon, you are, I said this to you personally, but you are about the hardest working teacher I think I've ever had. So for people that, are interested in getting their arms around this, there's no better teacher out there than Ramon, because he has a total passion for it. And I mean, he says his courses are going to be for 2 hours. I don't think I've ever sat through one that lasted less than 2.5 hours, because it's just, he just packs the information in there and makes sure through his teaching methods that, that you get it.
Well, thank you, Franz. Let's jump to the last class that we want to go through. And this is such a fun class because uh, for multiple reasons. Well, first of all, we're going through the markets, through the current market. So we don't know what's going to happen. This is not an exercise. This is a real deal. This happens now. And this is the class where, together with Bruce Frazier, we're discussing the current market conditions, and we go through the stock selections. We're talking about the themes that are emerging, that are of interest to us, and then we also discuss some of the work by our students. We also have some rotational themes, like we're discussing scanning, we're discussing, communal Wyckoff watch lists, we're discussing your submissions, we're discussing um, some other themes like anatomy of the trade, where the whole group, the whole class is trading one asset throughout the whole semester. And then it's always fun for me to conduct these classes because of Bruce's presence. And Bruce is just unbelievable like coffee. And if you are not familiar with his work, please go to Stock Charts and read his blog. It's a whole book that he wrote there on that website, and you absolutely have to read that. Franz, so with WMD, what's kind of like the biggest value for you personally from that class?
Well, let's just take last night, for example. What are the most important things that you have to have? I'm a stock guy, so for me, the first thing has to be an understanding of the overall market. Well, WMD, I think last night spent 25 or 30 minutes just going through the current market environment. If you want to just catch up on where things are with the overall market, invest an hour and a half a week and you'll know. The second thing is, after we have an idea of the market, we have to figure out what industry group we're going to be in if we're stock investors, because that's the second most important influence. And last night we're going through every single industry group, looking at charts, looking at the relative performance, relative strength versus the overall market. And the takeaway is, hey, these are the ones that are working, these are the ones that aren't, so I better be focusing my attention on that. And then all of the other things that come through in terms of looking at different people's, different students, including myself. I submitted one yesterday, stock ideas or different ways of looking at things. Another contributor sent in a point and figure analysis of the relative strength of growth versus value, a point and figure chart. I mean, who would have thought of that? And I mean, it was just it's just a great resource. So there you go.
All right. Well, with that, guys, if you have any questions, email us at wyckoff@gmail.com. I would be happy to answer any questions. If those are administrative questions, Nancy will help you out to set things up. And I'm looking forward to having serious traders joining us, and it doesn't really matter whether you're a beginner, intermediate, or advanced trader, doesn't matter. As long as you have a very serious commitment to our craft, to improvement, self-improvement in trading. So you are all welcome. All right, well, with that, let's jump to our trade for this session. And this is AXTI, American Axtile Technology. This is the stock in the semiconducting industry group. And again, this was sent to us by one of our students, Kurt. So a very big thank you for submitting this trade. And let's quickly just look what we're seeing on the chart. So the first thing that I see is a trading range out of where the trade has originated. So here's our point of entry right here. And our point of exit is here. And my first question to Kurt, and we probably should have asked him, about this trade a little bit more. What was the intention behind this trade? Was this a swing trade? Was this a campaign trade? So I think that today we might discuss it from both perspectives because, both perspectives are actually could be quite beneficial. But before we go into this, Franz, what do you see in this trading range? I mean, what would be your quick analysis of this trading range?
Well, I like the way Kurt has delineated the support level and the resistance level of the trading range itself. I like that he's commenting on where earnings report, the October 29th earnings report occurred, so he's at least aware of that. I definitely like down in the volume area how he's noticing what's happening there in terms of supply versus, effort versus result, and he's making, paying special attention to that. I think that where he's noting the significant up and out movement, what we call the sign of strength rally, and the backing up action is identifying that extremely well. And I think, structurally, he's done a great job here looking at, a really nice opportunity, and then following the rules that we've kind of talked about in terms of trade management. Where is the most optimal place to enter a trade? Well, it's after the backing up action is complete and the stock is getting ready to mark up. And look at that, man. Nailed it, Kurt. Great job.
Absolutely, yeah. So if we would be just talking about this whole trading range, I mean, the question of the buys is pretty simplistic here. After the big run up, and you will have to look at this, on the longer time frame, the change of behavior was not that pronounced. The distributional range here was the supply that was coming in into the rally itself was not significant. We're just seeing a lot of selling into the strength, and then that selling is very much subdued, and the price structure looks very bullish. I think that the key for the actual movement of the price comes from this area right here. And I'm extremely happy, Kurt, that you are noticing the volume spikes that we're discussing so much in the classroom. So what do those spikes tell us? Well, obviously, still presence of the supply as it was here at their original, stopping action. So what does it mean? This means that we're still having some selling, and we could anticipate some kind of reactions. What kind of reactions do we have here? Well, these reactions do not come to the lowest point of the support, which becomes a very bullish interpretation, but we still haven't supply on the next attempt to go out. But that supply, please note this is very subtle, is less at this level of the resistance. So what does it tell us is that there is an absorption at the higher level that is going on at around $6. And our anticipation is that at some point we're going to break through this resistance. We are breaking through this resistance on this bar. And this big volume spike is not just the presence of the supply, but obviously, and most obviously, a presence of, somewhat of the command and demand that takes us out of the consolidation. But because supply is still available at this level, we know that we're going to have another reaction. Now, prior reactions were kind of like vertically down. This one is more horizontal, and that's a big difference, because once you have a horizontal reaction, that just tells you that there is no progression of the price to the downside, and that shows that supply is not in control anymore, or at least cannot produce a meaningful reaction. Plus, we are reacting flatly at the point of the resistance, which before we were not able to overcome. So those are very, very important points. I also want to mention this particular bar was the supply spike. So this is the lowest supply spike that we have, and it's at the highest price level. So again, we have a very confirming supply signature in the bullish case scenario. And sometimes it's hard for students to think this way in terms of both supply and demand, that both are present, that both are producing some kind of result. But you kind of have to push yourself and explore that type of thinking. Now, the next point, and I totally agree with Franz, this is a really good point of entry. This is a point of entry, probably number 4 on our list of points of entry. If we would be thinking about, entering the positions, Franz, where else do you think we could possibly do that?
Yeah, the sequence is we start with a probe at phase C, and phase C is the last evidence of supply that is able to move price in such a way that we can see that finally the CO, the composite operator, has absorbed enough supply so that price can now move up and out of the trading range. So we start there. We're not always sure of phase C. A lot of times it can still be within the trading range at what we describe as phase B. So we just start with a small initial probe, but it's a good place to enter initially because the downside is just slightly underneath the bottom of the trading range, so our risk is very well contained. Once we're in that, we're looking for confirmation, and that would be entry number 2. And entry number 2 is typically what we call a significant bar, where we see good price movement, strong volume, supporting the movement, and that's our second entry. Our third entry is after we're up into the backing up action and are starting to pull back and are seeing some sort of a phase C, similar kind of, action in the backing up action. And then number 4 is where Kurt entered. But from the standpoint of a swing trader, and like you mentioned earlier, we're not really sure what Kurt's intention was with this trade. From a swing trader, that final entry is where you're going to get the mostest for the fastest. The mostest for the fastest.
Yeah, and I would say even this is a point number point of entry number 4 is the high probability entry.
Mm-hmm.
So this is where the supply has been observed both at the support level and at the resistance level, and the price is already moving in a swing up type of manner. So, and we kind of see that this is the swing, or this is the swing that we're trying to catch here. Okay, well, let's move on here. So the entry was great. Now, if this is a swing trade, then we need to figure out where our exit would be. And just thinking about, significant bars and movements of the price with the significant bars, how would we move the stop loss? I probably would go something like this in terms of the movement of the stop loss. So if you're doing your swing trading more mechanically, this is the bar where you most likely will be considering exiting. Why? Well, because the loss commitment to the upside happens on this bar. The supply tail suggests that there is some supply that is coming in at this point. And please note how different this price action and supply tail relative to where supply actually comes with a little bit more force. And yet the close on that particular bar, which is, we could consider that climactic stopping bar, is somewhat better because the close is higher and closer to the actual high of the bar. So right here, we could be considering exiting actually at multiple spots. If we want to scale out, we would scale out on the climactic action number 1, on the close of that increase in supply tail, that's number 2, and then number 3, where we see the commitment below the last significant bar to the upside, and then obviously, our exit is here on the trade. I would probably wait here. I would probably wait for some kind of reaction to exit on the way up to optimize, that price for the exit for us, especially when the supply signature is not that great. And the price action itself also is not that damaging. Also, please note that this whole bar is still within the body of this climactic bar that we're seeing. So we're not violating, we're not committing below that bar, and that still suggests continuation, and that still suggests some kind of, weakness of the supply. Franz, what are your thoughts on the exit?
Well, I see what Kurt did because I do it myself. But it's that, that significant bar down after the upthrust, and then you're thinking, look out below. And, you sell more based on emotion than thinking a little bit more about what you were talking about, which is that, there's always going to be some sort of a reaction, especially when you look at the volume signature and you look at what's gone before. So, just kind of back away, look at it from 30,000 feet if possible, and know that there is going to be some kind of a, off of that reaction, there's going to be some sort of even a little bit of a rally. So don't necessarily sell on the weakest bar. And like I say, I've done that myself. So
yeah, and one of the things here, Kurt, and just depending on your sizing, I would maybe just exit some here and then just wait and see if there are any violations of this level of about $8.50, $8, and then see what kind of price action we have. Because what comes next? Another attempt to break out and another volume spike, which shows diminishing supply character and also diminishing result relative to what we've had, let's say somewhere here. This supply tail is slightly less. Also, we have the same type of the situation where the next bar reverses that attempt to go up. But look at this reversal bar compared to the one that we've had before. So that shows already some weakness both on the level of the volume signature that we see and also in terms of the result that we're seeing as well. So that is suggestive that whatever selling comes in this particular consolidation at the level of the resistance, that supply and that selling is actually diminishing, and that suggests continuation to the upside. And that is, again, a question about what was the intention for the trade. Was it a swing trade? Was it a campaign trade? If this was a swing trade, then your most optimal points of exit are this, and then somewhere here. If this is more of the campaign trade, then you are still holding. You might scale out some around this area, and then you still holding for the continuation up. And the reason why I'm talking about continuation here is because when you look at the weekly chart of the same stock, what do you see? Well, you're seeing quite a lot of causality, and you've mentioned the PNF cores in for this area right here, which brings us to about $11-12. What if we would increase that causality and go all the way through the most recent consolidation into the phase C corvid low, minus sign of strength on the weekly chart, last point of support trading range, and then look at how we are now in the vicinity or above the climactic action that prior stopped the whole uptrend with the emergence of selling and emergence of supply, and we're holding there. And on the daily, it definitely shows that it wants to go higher. So I would kind of, go a little bit further away from the daily time frame, look at the larger time frame, and make that type of assessment. All right. Well, Franz, let's go through the post analysis here. So bias. Are we saying
Absolutely,
yes?
yes. He got that right.
Absolutely. Timing?
I think the timing was great, so I'd give him a yes on that. I think the character was yes.
Absolutely.
Point of entry is yes. Stop loss. He didn't really mention his stop loss, and we might give him I don't know. What do you think about that one?
Well, on the one hand, I mean, like the ability to hold on to the trade has that stop loss built into the whole movement. But probably, like if we would think about mechanical stop loss, a little bit better stop loss exit would be somewhere here, so maybe 50-50.
Okay.
Okay. There were no add-ons here, and then exit, I would say probably
50-50 maybe.
50-50, yeah. So what do we have? We have 5 out of 7. So let me quickly calculate that. That's
5 out of 6, right? 1, 2, 3, 4, 5, 6. Yeah, 5 out of 6.
1, 2, 3,
Because we're not
5. Well, because those both are 50-50. So 5.
okay.
Yeah,
All
so
right.
71%. So in the comments, I would say long-term picture, that's number 1. I would look into that. Also, stop loss movement, that's number 2. What other considerations, Franz, would we have for current?
Well, I think sell on strength rather than on weakness. Just a general observation. And expect expect after weakness, expect some sort of a rally. So just keep that in mind.
Yes, absolutely. So Kurt, please consider this, and obviously we're very grateful that you've submitted this trade. A lot of interesting lessons that we can learn from this particular trade. All right, and with that, thank you guys for watching this week's episodes of the Anatomy of the Trade. Next week, we're gonna come back, with more trades. So before that, if you would like to consider submitting your trade for our analysis, and we will be very happy to go through this, email us at wyckofassociates@gmail.com, and we'll gladly do this. Franz, thank you so much. Great session.
Thanks, Ramon.